Hey guys, on today's coverage with Crowley, we're going to talk about what the difference between replacement cost and actual cash value is on your homeowners. So one of the most griped about things that we hear all the time is when we run quotes for homeowners and they see the coverage limits, or current clients see their current coverage limits on their house. We get the phone call that says, hey, my house is not worth $350,000. It's only assessed for $150,000. Why do I have so much coverage? Homeowners insurance policies are based off of replacement costs, or at least should be based off replacement cost coverage. And what that means is if there was a total loss, how much would it cost an insurance company to pay you to rebuild that house the same way at the current day's construction prices? Hi guys, I'm Mike Crowley, owner at the Crowley Insurance Agency. Most insurance carriers require you to have full replacement costs on your homeowners and also some other property that you may own, whether it's rental property or secondary seasonal camps or things along those lines that you have personally. There is some options to potentially have an actual cash value policy. An actual cash value policy is similar to a market value policy, appraised value policy, and basically means that they're going to give you the coverage limit based on what you think the house is worth. So if something happens, most likely you're taking whatever money you can and leaving and not rebuilding the house. One thing to point out and to make sure you're paying close attention to is that on a replacement cost policy, it is replacement cost not only for the total losses, but also the partial losses. So you got that $30,000 kitchen fire where your cabinets and your countertops and everything else and your appliances need to get replaced. The insurance company is going to pay all that minus your deductible. When you have an actual cash value policy, the insurance company is going to take depreciation off of the claim payout. If you're only carrying like 50% of what the actual replacement cost value is, they may only pay you 50% of that claim. There's calculations built into how that's calculated, but it's very important that you know that the reason your dwelling coverage is so high is because the insurance company's contract wants to replace the damage to your house or your property. Hopefully you found this to be helpful. If so, hit that like button below. Also, if you think that your replacement cost is way too high, reach out. Hit the link in the description below. We'll gladly run and go through a replacement cost tool and show you what it costs to rebuild houses in the current day's construction prices. We appreciate you watching, and we'll see you again soon.